Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here with your Wednesday morning pre-market webcast. Okay, we'll start on the daily chart, then we'll talk about the hourly. We're back to a volatility market. Bottom line. We've had this very long compression phase throughout the summer, which has basically bored some people right out of this market. And now, compression always brings expansion, and you got to be patient. You've got to be focused, and when the time comes, you take advantage of what the market gives you. And it's given us some fantastic trading, just some fantastic trading the last 3 days. The kind of fantastic trading that makes up for all of the other, boring stuff before. Friday we have a big move down. Monday we get, the bear market type bounce. The bears fight back yesterday. We're on a band ride. We're in day 4 of a band ride, of a lower band ride. And there's a couple key areas today that are going to define, where we are, if the band ride's going to live on, if there's a deeper price expansion to the downside here. The Bollinger Bandwidth comes in this morning at 3.43. So after being at 1 or sub 1 at different times, there's more than enough room for those bands to continue to expand. So as we get over onto the hourly, here's what I'm looking at. So Friday, let's get our bearings here. Friday, big move down. Round number down there at 2100. Holds, we get some support. Hello, bear market rally. 56 is your high. The last time we talked, we were coming back into daily pivot, weekly pivot. That was the support area that the bulls needed to hold. They were not able to do so. We broke down after the open, and we spent yesterday basically trading down. We were very trendy in the morning, a little less trendy as we got into the end of the day, but 2112 held up yesterday. So if you're a dip buyer, you're saying, okay, 2100 quarter, 2112, looks like a higher low to me. It does, looks like a higher low here. So as long as 12 holds, you're going to see the bulls continue to try to defend things. Now, you've got the 2130 area, which is an area that I put out to my subscribers last night as a risk marker on any kind of a short, and that's yielded 4 entries, fantastic entries. We've been trading back and forth between the 21 to 23 area and 2930 all night. The bears want to hold daily pivot. They need to break 2112. They need to break 2100. They need to take both of these areas out, preferably today. If they can do that, then they're in control of the tape. I would expect further downside. We'll start printing things with 20s on the front of them. If the dip buyers went out, then what you will see is you'll see 12 hold. You will see a move up above 30 towards 36. They've got to win the battle of the weekly pivot rather this time around, and try to move things back up towards the 56 high from Monday. Then, as you get back onto the daily chart, you have to look at where's the middle band. Middle band's coming in about 62.5. As long as we're below the middle band, the bears remain in control and ultimately rallies or sells. If they get over the mid band, if the bulls can convert the mid band, then we go back up to the upper band and we get into much more. But in all of that, the point I want to make to you is in any one of those scenarios, there's fantastic volatility. There's fantastic opportunity to find setups during the day, which is where e-mini traders like ourselves, this is where we live and breathe. So we have monthly goals. Those monthly goals have been hit, and it is the 13th of the month. So we're just going to keep on doing what we do. Everybody have a fantastic day. Follow us over at Twitter at Princeton Trader. Come check out the website PrincetonTrader.com. It was down for maintenance earlier this morning, but it's back up and running now, and everything's good. Knock on wood. Check out the chat room. I'll be back tomorrow morning with another webcast. Trade them well.